Hello, everybody. This is Steve at Credit Suite. Welcome to our StreamYard, our live event today, where we're going to talk about how to protect your personal finances with your business credit portfolio. How to protect your personal finances with your business credit portfolio. Again, my name is Steve Weibel. I work for Crandall, the CEO here at Credit Suite, and he is the best-selling author of Business Credit Decoded. By the way, speaking of business credit, get your free business credit guide at creditsuite.com/EIN. Again, that's creditsuite.com/EIN. So look, last time we covered whether your business credit cards will actually affect your personal credit. We get asked this all the time, whether business credit cards will actually affect your personal credit, and why establishing a strong business credit profile will help assure simply that they don't. Right? So again, this is what we covered last time, and how and when to use a personal guarantee, because there are times when it's important to use a personal guarantee, and then there's times when you don't have to use a personal guarantee to get business credit cards. So how do personal finances relate to your business credit portfolio? Look, a business credit portfolio positions your business to fund itself, right? That's what we're really all about, building that business credit portfolio so that your business can fund itself. You won't have to keep opening your wallet to buy equipment, pay bills, make payroll, advertising, et cetera, et cetera, et cetera. In other words, there are multiple things that you can use business credit for, and having that strong portfolio is certainly going to allow your business to fund itself on a day-to-day basis. Another big part of your business credit portfolio is how you can cushion your personal finances and actually protect them. That's what we're going to dive into today. So what does the perfect business credit portfolio look like? It's designed to protect your personal finances. Your business absorbs all the risk as opposed to yourself. And once you've built business credit, you don't have to put your house on the line just to get a business loan. Like, this is what a perfect business credit portfolio looks like, but it doesn't quite start out that way. Okay, it doesn't quite start off looking the way we obviously want it to look at this point. So when built correctly, business credit is independent of personal. Applying for it doesn't harm your personal credit scores unless you apply for business credit that requires a personal guarantee. Building this asset can only help your business. So if you build your business credit profile correctly, it should be independent of personal guarantees. Okay, applying for them, it will never harm your personal credit scores. And not only applying for it, but if you get the right kind of business credit, utilization doesn't affect your credit score. You can max them out. Your credit score is not, remember, your personal credit score doesn't even know about that particular business credit, unless you're applying for business credit that requires a personal guarantee. And sometimes, even though you're guaranteeing them, they still don't report on your personal business credit. I can tell you personally, I have business credit cards that don't report on my personal credit. Now, if I don't pay those bills, and let's say I go bad on them, I just use them and never pay them, they will come after me personally, and then it will show up on my personal credit report. But if managed properly, which I obviously do, and you use it, I don't care, again, max it out every month, it's not going to affect your personal credit score. Building this asset literally will help your business. You can help your future business right now, right, by starting to build your business credit. So in other words, when I talk about it with my customers and prospects, when I talk about building business credit, I like to compare it to chess versus checkers, right? So I'm a big fan of planning for the future. Chess is thinking 4, 5, 6, 7 steps ahead, where checkers, you tend to look at what's on the board in front of you and kind of maneuver around it. Maybe you're 2 steps ahead. So you're dealing with what's right in front of you. With chess, you're planning 3, 4, 5, 6, 7 steps ahead. If you're that good, you're thinking about your business as it's going to grow in the future. So to build the perfect business credit portfolio, you're going to start with vendor accounts. They're a great way to start. It's how everybody starts. I don't care how big your business is. If you've built a business credit profile, we all start the same way. We get vendor credit. We get people to give us supplies, give us terms, and we use that credit. We pay our bills on time, and they report. Look, the reason they're important is because they have less stringent requirements for qualifying. Right? So if you have nothing reporting, and I pull your business credit report, and there's nothing there, as a matter of fact, it's worse than nothing. It always says something negative until you actually build that profile. The odds are I'm not going to give you credit, but our starter vendors will do exactly that. They're willing to take the risk. They're going to have less stringent requirements. They have requirements, by the way. It's not a free-for-all. And they certainly don't fall under the same regulations as credit from banks. So that is, the vendor credit does not come from a bank. So You're not going to a bank and applying for vendor credit. One of the best things about vendor credit is the fact that it's generally not attached to a bank, generally. And if it isn't, that means that 31 CFR 1010.230 does not apply. That's basically a law, all right? It's a federal regulation, it's 2018. It requires that anyone in a business with at least 25% stake or control must provide their social security number when applying for a loan. And there's a couple of reasons for this. One, it's protecting the banks, obviously. And two, it's also about homeland security and funding terrorism and so on and so forth. Okay, and that's a webinar for a different time. But vendor credit, you don't have to worry about that. Okay, so this federal regulation only applies to lending institutions such as banks, etc. But a starter vendor like Uline extends credit to your business, and they're not considered to be a lender, right? Because they're providing you a product and giving you credit for it. So a social security number is not required. And we talk about that. We talk about starter vendors, and I always tell people, look, it's not exciting, but you need to build the foundation of that house. And this is how you build the foundation. You do it with vendor credit. When not attached to a bank, there is no social security requirement for starter vendor credit. This is unlike bank loans and bank cards. So leave the field blank. Do not fill in anything else. A blank field will force them to pull your business credit under your EIN. When it comes to a field requiring a social security number, I just kind of touched on this. Don't fill in any other number, ever. Any other number, okay? This is a violation of not one, but two federal laws, 42 U.S. Code 408 and 18 U.S. Code 3028A, I believe. Yeah, 1028A. My memory's not so great. You'll find yourself actually being accused of identity theft if you do that. So don't fill any. If you see a blank social security number on an application, blank social security spot, just leave it blank. Don't fill in anything. Or if you're going to personally guarantee it, then obviously put your social in there, but don't put your EIN number in there. Don't put your DUNS number. Don't put any number in there. You're actually committing fraud and potentially theft, okay? So once you get this vendor credit, you're going to continue to grow your business credit portfolio, which means credit cards, right? Once you've added payment experiences from at least 3 vendors and they've reported to the business CRAs like Dun & Bradstreet or Experian or Equifax, you can start qualifying for store credit. The store credit is exactly what it sounds like. It's credit with stores. And by the way, also fleet credit. So you can start getting fleet credit cards. You can start getting credit with stores. I'm just going to mention a couple. You talk about Staples and Home Depot and Lowe's and Office Depot and, well, look, Amazon. Who doesn't buy from Amazon at this point? Right? But keep in mind, any cards issued by banks will fall under federal regulations. Every step and every credit provider is designed to help your business. Every step and every credit provider that we specifically talk about is designed to help you grow your business credit profile. It's designed to help you qualify for business credit cards you will actually use. This isn't building for the sake of building, and it isn't just to increase a number. These credit providers are going to have what your business needs to succeed. So in my example, I was a big fan of credit with Home Depot and Lowe's because I was a real estate investor. That made good sense to me. I was going to buy from them anyway. So whether I went in there with a Visa or a MasterCard or American Express or a check, didn't matter, right? I was still going to buy from them, but to get credit from them directly for their product was amazing. It was perfect. It was exactly what my business needed. Doesn't matter what business you're in, I promise you, you're buying products from someone that if you can get credit for that, it's just going to make your cash flow management that much easier. Right. It also means PG and non-PG credit. So in general, personal guarantee should obviously be avoided, right? Our goal is to build a business credit profile so that your business can stand on its own 2 feet. However, that's not always going to be the case, but there are certainly going to be times where you're going to need certain credit, and you're going to want that certain credit, and you just can't avoid giving your Social Security. That's okay. That's okay, which is exactly why I tell people, look, build your business credit, but work on your personal credit at the same time. You want to approach lending like there's no chance they're going to turn you down, right? You want to be walk in and put your, and I'm sure you've all seen that commercials way back in the day when people were applying for mortgages or loans, whatever. They put their feet up on the desk because they were monitoring their personal credit with whatever the personal credit monitoring service was. Anyway, it was a commercial on all the time. They were confident they were going to get those loans. We want you to feel the same way. So you want to have that real strong business credit profile. We want to have that real strong personal credit profile. So no matter what comes at you, no matter what direction, you're prepared to solve it. All right. So there are two types of personal guarantees, by the way. There's the limited, and then there's unlimited. Okay. To the extent possible, you obviously want to negotiate for limited personal guarantees under unlimited. That just makes sense, goes without saying. In unlimited personal guarantees, business owners are basically responsible for covering the total loan amount if the borrower fails to satisfy the debt and any associated legal fees. So it's not just the debt, but if they sue you, you're going to be responsible for those fees as well. For business owners, there's no cap on unlimited personal guarantees. There's just no cap. All right. But limited personal guarantees create a limit, obviously, or a cap on the amount that the business owner may owe in the event of a default. If a personal guarantee will help you qualify for funding or credit cards and you wouldn't qualify normally without it, then sometimes it can be a smart decision to offer one, right? That's something you have to make a personal decision on. You have to decide whether or not this is something that is worth you leveraging your personal credit, because that's exactly what you're doing. You are leveraging what you've built, hopefully to help you build your business. I never argue with people when they say, hey, I just want to do a shortcut and personally guarantee getting high limit business credit cards. That's never a problem. I actually understand it, and it makes total sense in a lot of cases. Plus, by the way, your PG loan can and should be part of building business credit. So if you're smart and you handle it the right way, you can get business credit cards that you guarantee that help you build your business credit. Matter of fact, I don't want to call it a shortcut, but it kind of helps you increase your limits down the road. So when you start off with vendor credit, you're going to typically get low limits. But if you PG, let's say a Discover card, or not Discover, a Visa or MasterCard, the reason I say not Discover is because they actually report on your personal as well. If you PG a Visa or MasterCard and they're going to report on your business credit profile with high limits, why not? Right? Because the limits that you start at are the base, they're the foundation. Things will grow from there. So your business doesn't need, by the way, perfect credit to get a loan. Right? Most businesses, there are many financing options available. Make sure you explore all your resources, understand what they're going to cost you and your business before you decide on one. Now, when I talk about perfect credit, like when we talk about a Paydex score with Dun & Bradstreet, we're talking about an 80. Typically, when people are looking to extend credit, they're looking for a 78 score or better on Dun & Bradstreet. So 78 means you don't pay everything on time, because we understand, we as lenders, we as, you know, in the general sense of the term, creditors understand that businesses have cash flow issues. Nobody, if they're doing $1.2 million a year in sales, doesn't do $100,000 a month. They might do 150, the next month maybe do 80, or maybe 3 months in a row of 100. They understand that cash flow is never perfect. Right? So sometimes things are going to be tight and you may not pay it in the net 30, you may pay it in 38 days or 40 days. That's going to generally give you about a 78 Paydex score. That's okay. Don't look at that like personal credit where you go, oh my God, I have a late. That's a problem. Certainly you don't want to consistently be late, but it's not going to destroy your business credit portfolio. All right. By the way, if the business is stable and you know will be able to cover the debt, don't worry about the type of financing. As long as it makes good sense and you have less risk in signing on a personal guarantee. You got to make sure that the business will be able to pay that loan back. Okay. So are you in control of how the business handles the finances? We're going to go down that road a little bit. So you're thinking about personally guaranteeing a loan for your business. That's fine. All right. If you're in control of how the business handles the finances and you're the one who actually signs the checks and you can make sure the bills are paid on time, no worries. If someone else is handling the accounting, you may want to be wary about signing a personal guarantee. You certainly don't want to put your name on the line if somebody else is the one who's responsible for making the payments, right? Almost no different than personally guaranteeing a car loan for a cousin or a friend or whatever. That's fairly dangerous. I know. I actually did this years ago, and I don't have to tell you how the story ends. Well, I'm going to tell you, but I don't have to tell you. It ended up being repossessed. Right? They couldn't make the payments. So if you're not responsible, if you're not the one responsible for handling the bills, you're not the one who handles the checks, who signs the checks, be wary about signing for a loan for your business if somebody else is running that side of the show. All right. And then the question is, can you afford to take the hit if the business fails? That's a question you have to ask yourself. Not that anyone starts off planning to fail, but you don't want to fail to plan, right? So if you're thinking about personal guaranteeing a loan, think about how that will affect you personally and your family God forbid the business fails, right? It happens all the time. All right, there's no such thing as a sure deal, and you can't assume the business is going to be 100% going to make it, right? That means you need to be able to make good on the debt yourself in a worst case scenario without giving up your personal financial stability. So if you look back and say, hey, I'm going to personally guarantee this business loan because even if things go bad, the payment's $300 a month or $500 a month or whatever it is, you look and go, you know what, no matter what, I'm good. I have money in the bank. I have no problem paying this loan off if the business happens to go down. That's not a bad decision then. If you feel comfortable, you've got to weigh the pros and cons like any other business decision, okay? All right. The personal guarantee is a critical component to leveraging your credit portfolio properly, right? But once your business credit improves, do what you can to completely avoid handing out that PG. If you look at what funding your business needs or what credit your business needs, I was a big believer in 80-20. 80% of the business should be on its own. It should have nothing to do with me. There's always that 20% that I'm going to have to personally guarantee. I'm okay with that. All right. This will protect you at a much higher level. You absolutely want to let the business stand on its own 2 feet. All right. And again, another idea for you. I talk to people all the time and say, I need a $100,000 loan, I need a $200,000 loan, whatever it is. And then we break it down. What do you need the loan for? I have payroll, I have marketing, I have this, I have that, whatever it is that they need the money for. Generally, I find less than 30% of it is actual cash. The rest of it's all credit they can get from suppliers. They can get credit for credit cards, again, suppliers, stores, whatever it is. They don't really need that $100,000 loan. They may only need a $25,000 loan, which, by the way, if you're going to have to personally guarantee a loan, would you rather personally guarantee 100 or 25? You don't have to answer that. I already know the answer, right? Obviously, it's safer to do 25 and let business credit get you the other 75, right? This is going to better protect you, your personal finances, and your family, right? So you're going to get no PG with most vendors, but there is a PG with no reporting on most credit cards, not all credit cards, but most Visas, MasterCards, etc. There's going to be a PG with no reporting. Okay, so there are small banks all over this country that will give your business credit with a PG. They just don't report. They don't report personally or on the business. You won't risk fraud on your debit card if you do this. In other words, anyone who's ever used a business debit card to buy something, whether online or in person, you understand the risk that you're taking. You're allowing someone to potentially have access to your bank account. Again, guilty as charged. I did this and I found out the day before settlement on a property that I had no funds in my account, and I had lots of money in there. Someone back then, it was Nextel dealership, had actually used the debit card. I bought some Nextel phones for my team that worked for me, and they accessed my bank account. And they cleaned it out. Now the FBI got involved. And they caught him. And all things worked out well, but I would tell you that's scary when you go to the bank and there's suddenly nothing in there. I'm not a big fan of debit cards, never have been. I don't use one. I will never use a debit card. As a matter of fact, since that day, I'll use a credit card for everything. First of all, to get points, to get cash back, whatever. But also, more importantly, no one has access to my bank account ever. Unless I write them a check, they're not even going to know I have a bank account. So be careful. That's one of the reasons I love business credit. Keep your business moving even if cash is tight. Okay? So no PG with most vendors. There is PG with no reporting on most revolving credit cards. But again, you won't risk fraud on your debit card. You keep your business moving even if cash is tight. Right? Many business loans will require some form of collateral. Right? You can best protect your personal finance by offering up business assets. So if you were a manufacturer, I'm going to use my old printing experience. If you were a manufacturer and you had a printing press that was worth, let's say, $500,000, which would not be unusual, you could put up that asset as opposed to a personal guarantee, right? So you're giving up a business asset versus a personal asset, like your house. Let your business absorb the loss if there is one. Again, this is all about protecting your personal finances, using business assets as collateral for loans. Try not to use your house. Try not to use your vehicle. Try not to use your 401k. Anything that's personal, if you can, avoid it. If the business has assets, take advantage of that. Business collateral can be merchant cash advances. It can be accounts receivable. equipment that you own, which we touched on, a book of business with renewable commissions if you're buying an insurance agency or if you happen to own an insurance agency, inventory if you have enough of it. We're not talking about 500 t-shirts. I'm talking significant inventory. Commercial real estate's a great asset that you can use. So when you're ready to get business loans, make sure to leverage your business assets. Okay, I know that makes sense to everybody. Sounds like common sense, but it's amazing how quickly people are ready to put their house up on the line for their business. And I always argue, use a business asset if you've got access to one. All right. Good business credit will make, by the way, SBA loans accessible. All right, and the SBA have great rates and terms. One of the biggest misnomers, I believe, in the lending world is that SBA loans are difficult to get. They're not. They're only difficult because most people have no idea how to apply. And not that they don't know how to apply, they don't know what they're supposed to look like when they do apply, because loan officers say things like this. Make sure you have a good P&L, make sure you have good personal credit, good bank statements, and we'll go ahead and apply. They never mention your business credit profile, but the SBA 100% checks your business credit profile. And if there's nothing there, they have to focus somewhere else, right? They have to dive in deeper. Where do you think they're going to dive in deeper? Into your personal credit. And they have the best great rates and terms, the absolute best. Great business credit will help you get good terms with new vendors. So if you have new vendors. Matter of fact, I was talking to a company that sells online. They sell a great product. I'm not going to mention it here today because I don't want to give away their secrets, but they have a vendor that supplies their product at about 30% cost of what they sell for retail, which is outstanding. It's outstanding rate of return because they have X amount for marketing, and then they have a nice, good gross profit margin. So I asked him, what type of terms did his supplier have? He was buying, literally millions of dollars from them. He said they don't have any terms because his business credit profile is terrible. That's why he reached out to us. So he's paying cash up front for his inventory because he's never built a business credit profile. So even if it's not a vendor that reports, but it's a vendor you do business with, like to any of you print manufacturers out there, paper vendors, very few report, but they absolutely check your business credit report. You need to have a solid business credit profile in order to get these great terms with vendors, okay? And of course, you'll be able to get more credit cards as your profile grows. So again, you're insulating yourself against them touching your personal assets, your personal credit, all right? Here's the bottom line. Those who have it, right, get more. How many times have we heard that, right? Those with money who don't need money, everybody's offering it to them, right? Those who desperately need money, nobody wants to give it to you. If you have credit, it's easy to get more credit, right? As you go along, you're going to enjoy improved credit limits, first of all. And people forget this a lot. When they're building their business credit profile, they'll use starter vendors, and they'll get credit, and they kind of ignore them after that. And I think that's a major mistake. If you continue to use those vendors and then ask for increases, as they increase, you're going to get recommended higher and higher limits with other vendors and other suppliers and stores and again, Visas, MasterCards, American Express, things like that. So you want to raise your limits all as one. It's like a flood, like water coming in. You want that water level to keep going higher and higher and higher. So don't ignore your beginning vendors because they're the ones that step to the plate for you right out of the get-go. So they're the ones, the odds are going to give you the highest limit to begin with. In other words, when you go back for increased limits, they're going to probably approve you before anybody else will. All right, you're going to end up paying lower rates, longer amortization as you improve your business credit because you're spreading out payments over time. All right, so create your operational credit portfolio. This is what you use the most. These are things that you're going to use day to day. You won't have to provide a PG for most of what you need to operate your business. I kind of touched on this. You can improve your business credit with providers of office supplies, shipping supplies, retail credit, online and in-store. You'll get access to even a wider array of products and services you need. So think about your business and all the things that you buy. Matter of fact, if any of you use a credit card that provides you a year-end statement of what you spent your money on, you'll see restaurants and you'll see retail, et cetera, et cetera. It's amazing when you look at that. I love doing that every year. Actually, I don't love doing it. I just do it. And sometimes I go, whoa, can't believe I spent that much in a restaurant. But when you look, you're going to realize how much you're actually spending on supplies, on retail for your business. The number one consumers in the world are not us as individuals, it's businesses. Businesses consume more than anything else, more than anyone else. Truck drivers buy tens of $1,000s in fuel per year, as much as $100,000 in fuel per year. You and I would never do that, right? So businesses consume a ton. So take a look at that. You're going to get much higher limits. They're gonna provide you what you need to run your business. It's going to help you improve your business credit, right? And you're going to have access to literally almost anything. I mean, I'm going to pick on Amazon because everybody knows them, but what can't you buy from Amazon besides maybe a house, right? By the way, Credit Suite has the largest, most complete list of vendors ever. No one touches it. And it's not only that it's the largest and it's complete, it's that it's updated. And for those of you out there who think, yeah, I can do this on my own, it's no big deal. Congratulations, good luck. I promise you, I've done it on my own. It's not easy to do because something that changes all the time in our world is vendors constantly changing their underwriting criteria. They're constantly changing whether they report or not. And I'm not going to pick on one company that this year just stopped reporting and then suddenly began reporting again, but their sales dropped a huge amount. You've got to be updated on that information. And we have a team that's all they do. Okay, that's all they do is they update vendors, creditors, lenders, banks, the whole deal. We know exactly whether or not you're going to be approved before you even apply. Our products literally fit into any financial or time budget, right, within reason. Our core program and our Genesis program, there is a difference. The core is the business credit builder with advising. The Genesis is the business credit builder without advising. And obviously our NAV integration is so you can monitor your business credit. In other words, you can see what's happening in real time on your credit reports, monitor it, make sure it's correct, see that you have enough vendors reporting, move on, begin to grow even more credit. Again, this is Credit Suite. This is what we offer. Remember, if you're interested in talking to somebody about that, reach out to us at 877-600-2487. Again, that's 877-600-2487. You can actually just set up a free business credit consultation. Find out what your credit score looks like right now. Maybe you have something reporting, maybe not, but let's find out. We'll give you a little bit of guidance to get you out of that gate quickly. Ask them about the core program. Ask them about the Genesis, although I don't recommend the Genesis to people who don't have at least 5 or 6 trade lines reporting. If you are a newer business or have nothing reporting, I highly recommend you go with the core. It's faster, it's easier. You have a whole team that's guiding you through the process as opposed to you on your own, okay? And obviously the NAV comes integrated. NAV, I think, charges $36 a month. Our people get it for a huge discount on that, and it's integrated right into our system. So let's recap. While federal law requires the use of your Social Security number when you're getting a loan or credit from a bank, vendors have no such requirement. Keeping your SSN off vendor applications forces them to pull your EIN, in other words, your business credit, when deciding whether to extend you credit or not. If an SSN is not required by the vendor, if an SSN is not required by the vendor, sorry about that. So in other words, and most vendors, they don't require it. They really don't. Typically, we see when you get into the later tiers, they'll ask for your Social Security for identification purposes only, and you could specifically say that, and you do that by not filling out that blank Social Security number, okay? You don't fill that in. If they ask you for your social, say this is for identification purposes only, correct? If they say yes, say great, I authorize you. Matter of fact, a little secret, freeze your credit report when you're applying for business credit. Just freeze it. So they'll have access to your info for identification purposes, but they can't pull your personal credit. They have no choice but to look at your business credit. Your business, particularly if you have some time under your belt, has assets you can use as collateral when you start qualifying for business loans. So you can leave your personal finances out of the mix as much as possible. Look, calls today will help you forge your business credit into a shield to protect your personal finances. You can reach us at creditsuite.com/live-checklist to get your free business credit building guide. You can call us at 877-600-2487. And next time, we're going to cover building business credit over time, what the process actually is, how you can make the most effective use of your time, because that's a big deal. A lot of people ask me this, and we really want to see you avoid frustrations and dead ends. All right. Thanks so much for joining us today. Once again, contact us at 877-600-2487. You can simply email us at info@creditsuite.com. And don't forget, grab your free business credit building guide at creditsuite.com/live-27. This is Steve Weibel. Thanks so much for joining me today. Look forward to seeing you again next time.